We have seen several combination of candlesticks and understood whether they are bullish or bearish patterns. So Praveen has done this on Gemini Auto. So firstly, see here, doji with inverted hammer. We have seen a doji candle here, looks like a very good plus sign, and a perfect inverted hammer. And I've told you color doesn't matter, hammer is bullish, inverted hammer is bearish. We have seen a drastic fall immediately. Again we have got an inverted hammer. Again a doji here, this is a kind of doji, inverted hammer. Again a drastic fall. This was a kind of hammer. Hammer may have a wick which may be very small or it may not have a wick. There has been a sharp rise immediately. Then again here inverted hammer. You have seen a sharp fall there. Okay. This is bullish engulfing. Okay. After that we have seen a very sharp rise. But here the signal got failed. This is an inverted hammer. But what happened? It did fell down but not up to what we had expected. So maybe a minor loss we would have got. Signals do not work every time. We want only 60% success, but you'll be getting more than that. Doji. Immediately after doji, a big sharp move was expected, and that's how it is. Back to back two dojis, again we have seen a sharp move. Here also back to back two dojis, a perfect doji. Then we have seen a sharp move. Again a doji, kind of doji. Okay, and a sharp move. Again a doji, sharp move. Inverted hammer, perfect inverted hammer right at the top. You shouldn't miss this kind of signals. And there seems a drastic fall. A doji, again a fall. Okay. So overall, out of 7-8 trades that we would have got, maybe 2 would have got failed and 5 would have got success. While that you are losing very little amount, but while you are gaining, you would gain really big. So technical analysis patience is required. We are doing all this on monthly chart. You may have to hold the trade for a month or so. Coming back to our investment criteria for any particular stock. So firstly, we filter the stock which is fundamentally strong. Example, we see that NMDC is fundamentally pretty strong. Mark the zones. This is the current price. So above this and below this, you have to mark two zones, two parallel lines each, wherein you see that the price has been trading in that channel. Every time that the price touches the lower band, it retraces. Every time it touches the roof, it retraces. So here I can easily draw these parallel lines. So every time we have seen in the several years, that is since 2014, see more the time, better the signal is. If this is for a very long duration, then this is a drastic support for the stock. When the stock again comes into this zone, you should never miss to buy it. So this we term it as demand zone, wherein we have to attempt to buy the stock. And then similar parallel lines I can draw even at the top. So that is between 140 to 160. Alright. So if the price comes into this zone, you can expect a reversal again. So in case that you are holding NMDC, then this would be an ideal price for you to exit for once. Later if it gives us entry, well and fine. If it doesn't give us entry, we'll choose some other stock. But if you look at the risk to reward, if you enter it at 60 to 40 zone, so as the price comes into the zone, you'll be buying in installment till the price touches the lower end of the parallel line. We are going to still hold on to the trade. But if the price pierces this lower line, let's say this is 50 rupees and it goes below 50 rupees and it closes below 50 rupees, then we exit at loss. How much loss we would get? Average our buy price would be like 55 if we buy it in installment. But let us assume that you have bought full quantity out here itself. So 60 rupees you buy, 50 rupees is your stop loss. Risk is only of 10 rupees. But in case the price retraces and goes into the supply zone, you would gain 100 rupees. This is approximately 150 rupees. So the risk is just of 10 rupees. The risk is just of 10 rupees while the reward is more than double. It is more than 10 times. Even if you get 1:2, for 10 rupee risk, if you are able to get 20 rupees reward, then also you should be attempting the trade. Here the risk to reward looks very much favorable. So like this kind of setups you need to find out in the fundamentally strong companies. Out of the screeners and everything that you use, some 70, 80, 100 stocks would be your favorite stocks to buy. Do not buy them blindly, buy them at support zone and exit them in the supply zone or the stop loss point. Rules are very clear and very, very easy traditional technical analysis, but works like a magic. So you should have the guts to exit at loss in case this zone is not supported. And maybe it will happen that it cuts here, closes here and then it retraces. There's no need to regret. You have lost it. Maybe if you would have hold on to the trade, you would have gained it. But do not regret. There will be a lot of trades where it pierces and goes continuously down and goes near to zero. An example, Vodafone Idea. Example, Yes Bank. So you will be saving yourself from big losses. So do not ever regret even if your stop loss is hit and the price goes there. You have missed the trade, no problem. We'll recover it from other trade. Even with a success ratio of 25%, you can do wonders with this kind of trade setups. But believe me, you'll be having 60% plus success ratio. You lose 1 rupee, but you're gaining 2 rupees, 3 rupees, 4 rupees, 5 rupees, 10 rupees. That is how the reward would be. Minimum go for 1:2 risk reward, not below that. So this will be terming it as supply zone. Especially on government companies, these zones work beautifully. On commodities, it works beautifully. Alright. So we have to draw like this parallel lines as a channel where the stock price has been trading for a very long time. So if you want, you can take a screenshot of this, which will be an example how the lines have to be drawn. Now, would we buy this stock right now? No, we wouldn't. Why? Because the price is already much higher than the demand zone. So this is not a good entry point for us, because if we enter at 117, our stop loss is at 60, reward is only at 150. This is rather 2:1, not 1:2. For 2 rupees risk, you are able to get only 1 rupee reward. So don't go for such trade setups. Let's see more charts. Indian Oil Corporation. There may be multiple demand zone, there may be multiple supply zone. You have to mark as many zones as possible. Here I'll be able to draw only the demand zone like this. This is a perfect demand zone for the stock. Second demand zone I could draw like this. Alright. So because we have seen twice that the stock has reacted sharply. See, every time it has touched here, there has been a big movement. Every time that the price has touched here, we have seen a big movement. So in case the price comes back here, maybe due to rise in crude oil prices, Indian Oil Corporation, because of the losses that it is making, the price may set in here. And if at all it does, shouldn't be missed. Because the reward is going to be so huge that I do not find any supply zone in the stock. There's no parallel line that I could draw on the upper side, which means that there is no supply zone. Never ever miss any trade which it does not have a supply zone. Why? Because imagine, your risk is limited but reward can be very huge. It can cross even this one. At least there has to be 2 points wherein we could connect and draw parallel lines. We do not have that. So never ever miss such trades. This was a supply zone before. If you come back here, this was a supply zone. But it has broken that supply zone and went past it. So if you had attempted the trade, now we have seen once that the price went here, it went up. Again it touched here, it went up. Again it touched here. This trade we would have attempted if we were trading in 2008, 2009. So had you entered between 30 to 20, let's say this is approximately 25 rupees. At 25 rupees, if you had attempted the trade, all the way within 2 years, you would have got a return of 200%. Again, you would have got an entry here. Again, within 1, 2, 3 years, you would have got a return of 3 times. So you are entering it at the right point and you are exiting at the right point. So you had already made your money and exited it. Then you are putting money in some other stock where again it would rise like this. Again you are getting back to IOC. Again you are getting this growth. So you are just boarding the flight which is about to start. You are not wasting your time. You are not jamming your money. Yes, after exiting here, it could be a regret for you that the price further shot up and became double. There's nothing we can do. We would have exited here itself because that was a supply zone. It was likely to come here. It did not come. No problem. We have made money whatsoever and we have exited. Do not regret on the growth which has happened later. Alright. There could be some other stock that you have entered where you could have got this growth. After exiting here, you would have put money into, let's say, an MDC or some stock where that has also grown. Think in that way. So I want you to take the pictures of each of this which would help you out. Kindly take the screenshot. Alright, now comes the next chart, let's say ONGC. After this, we'll see private companies also. Look at this. An excellent demand zone. If at all the price comes back here, the trade shouldn't be missed. Why I told you longer the duration, better is the demand zone. Whatever the zone, demand or supply. So this has been for a very long time. Since 2004, this support is there. So in case in future, maybe after 3 years, 5 years, the price will go like this or it may come like this again, shouldn't be missed. The trade should never be missed. Do not worry about the fundamentals, because you have already chosen a stock which is fundamentally strong. Alright? You just have to now follow the technical analysis. Fundamentals is only for your watch list, so that you do not enter the wrong stock. This has been an excellent supply zone, because 4 times the price retraced from here, but then it broke out next time. Now the new supply zone is here. So if at all we would enter ONGC at this level, we can ride the trade all the way till 200 rupees minimum. An amazing zone. Alright, you can take the picture of it so that we can see the next trade. Now let us see some private companies. India Cements, let's say. What an amazing demand zone we have here. This is an excellent demand zone for India Cements. So if at all in future, may happen in the next 1 year, may happen in the next 10 years, we do not know. We have got lot of stocks. Every month some of the other stock will give you entry, some of the other stock will give you exit. So this, in case the price retraces here, then your target all the way is still here. Again, a very long duration supply zone, a very long duration demand zone. So the price is likely to oscillate in this particular range. So this is not an ideal entry for us to pick the stock. If case the price comes here, then only we would. Doesn't come here, leave it. Some other stock will give you entry. Hindalco. So demand zone was really good. The price did touch there. Okay, and then it went all the way till here, but we would not have waited till there. What we would do? We would exit here itself. But even then, entry at approximately 80 rupees and exit at approximately 250 rupees is an excellent trade, because your risk would be only of 30 rupees. Alright, but the reward is much higher than that. So like these waves only the stock would move, and these waves only you need to ride. Sea sailers, you must have seen lot of sports activities. The sea sailers, how they ride the big waves, okay, on the pad. So like that you need to do it. You need to ride the wave appropriately. And you know the mistake what retailers do? They buy here. They see that the price is rising in full momentum, let us enter it. That is a mistake they do. And they exit here in panic. You are doing exactly opposite. You are buying when there is a sharp decline, when the price is available at a discount, and you are selling when the price is trading at a premium. Likewise, let's see another chart. Wipro. no such particular zone. Then you have in private company Tech Mahindra. Okay, this is the zone we have. If at all price comes here, we would attempt to buy. If it doesn't come, we leave it. Alright. Supply zone was here. Now there is no new supply zone so far. That was the supply zone before. Then you have Hero MotoCorp. So this is an excellent demand zone. Amazing demand zone. In case the price comes here, this trade shouldn't be missed at any cost, because there is no clear supply zone in the stock. But demand zone is perfectly aligned. This was also an excellent demand zone, but unfortunately the price did not come here in future. But this can be expected. So during COVID time, when the price was crashing down badly, we had knew that this is a very strong demand zone and we would have attempted to take a trade out here. So had you done that during COVID time, buying at 1400, within a year you would have got a return of 3600, more than double, even in the tough times of the market. So write down a point here. So the minimum risk reward has to be 1:2 for you to attempt a trade. So this is going to be homework for you. So look into your favorite stocks, any big companies that you can think of, Reliance, Infosys, SBI Bank, whatsoever, and then mark the demand and supply zone and kindly share it on WhatsApp. Find out if there is any stock which is trading in the demand zone, or at least close to the demand zone would also do. See here, an excellent trade if you want to pick it up as of today. So those who would want to buy any particular stock based on the theory of demand and supply, then this is a very good zone, because though it is not in this zone, but the price is very close to demand zone. There is no supply zone in the near side. Supply zone major will come here. If you want, you can take a screenshot of this very important trade. So this was an excellent demand zone which got failed. Okay, so trades may get failed also. See here, during the tough times of COVID, this is a failed trade. We have seen an example of success. Now look at the example of failure also. So we have seen that every time the price touched the demand zone, it retraced, again touched, retraced, again touched, went higher, again touched, went higher, again it touched here, went higher, again it touched here. What you would do? You would definitely buy here. So you're buying at approximately 70 and stop loss would be 55. So what happened? The 55 price crossed and it closed somewhere around 50. So at 70 you bought, at 50 you will have to exit at 20 rupees loss. There is no need to regret. If you had not exited, you would have jammed your money for 3 years. Again at a loss only. Even today the price is 50. So it's better that we exit here at 50 and these 3 years we utilize it some other trade. So trades can get failed also. Now again it is giving an entry to you. Maybe the loss what you made here, this time it will be able to make profit. This was again an excellent demand zone, but failed during COVID time because the banks were all in crisis. Okay, but the price again gave you an entry here. Those who could pick here, they must have got an amazing reward. Now, what would be the exit point for this? This is important. Very good supply zone here. So during this, you definitely have to exit. If you do not exit, it's only a regret. Excellent supply zone. So this is a very bad entry for any stock because the supply is so strong and the price is already to supply and it has already risen sharply. Never ever think of taking such kind of trades. This is a good company. Southern Petrochemical. This was a strong supply zone. The price is already out of the supply zone. The company is good, but chart pattern is not suggested. Only we would buy if the price comes here. This is an excellent demand zone. So unlikely that the price would come here even in our lifelong, because this is like 10 rupees to 5 rupees. Doesn't come, we'll leave it. Maybe in future like this, one more demand zone will get created like this. So that may happen after few years. But for now, this is not a good entry. But the stock that we discussed recently, I told you that this can rise another 5% and it is. So it's all upper circuit. There are only buyers, the price did not. So what is this candle going to look like? Only one line. Which line? Horizontal line. Open, high, low, close, all of these are same. This is called as upper circuit. Gujarat Container. Okay, this is still giving you an entry. Gufic Bioscience. This is also still giving you an entry. But here the price already rose by nearly 9%. Let us have a look at company MOIL. Excellent demand zone here. Now observe here, I told you that we would only exit in case the price closes below the demand zone, right? So during the time of COVID, we knew that. So let's get back into the time. We are into COVID time now, okay? That is 2020. We could mark a strong demand zone here, and the price had come here also. This was a demand zone. Okay, the price has touched here, we would enter at 91 rupees. But after that, what happened? Stop loss was just 2-3 rupees and it pierced that stop loss. But would we exit? No, we wouldn't. Why? I told you that the closing of that candle, it may pierce here, but the closing has to be below that. Closing was not here, it pierced and then it retraces and then it closed here. So we would still be remaining in the trade. So had you bought at 90 rupees with just a 2-3 rupees stop loss, the reward has been, there was not at all any supply zone. So the reward has been really big out here till 210. Imagine a risk of just 2 rupees and the reward of 100 rupees. An amazing trade. So closing of the price is important. Don't just say that okay the price has pierced so we have to exit. No. Let it close. Let the candle close. Now this is a new supply zone. Not a strong supply zone because it is only in the recent past we have seen that. But anyway, we would exit in case we had entered the trade here, okay, and we exited here, or in case we haven't exited, then again when it retraces, this would be the exit point. The next supply is here, but we wouldn't wait for that. We require at least 2 data points. And then finally, we'll have a look at one chart. Ramco. This is one of my favorite companies for time being. Ramco Cements. So this is the first demand zone. We may not get this now for our lifelong. Okay, so forget that. This is a second demand zone. Okay, the supply zone is far away. So in case the price continuously falls and comes near here, near 100, trade shouldn't be missed, guys. You can expect a price of 300. Why? Because it's a cement stock. And I told you that this phase of the market, the old economy stocks like cement and all would give you amazing returns. So the stock is available at the demand zone, the risk reward is in control, and the market cycle is also favorable. Sector cycle is favorable. Never miss the trade. Right? So now write down the points. if the market cycle and the sector cycle now you are looking at the demand zone, you are looking at the supply zone, you are looking at the market cycle, you are looking at the sector cycle and their corresponding stocks. And then finally you are looking at the candlestick patterns. So if you are able to get the bullish candle patterns in the demand zone, your conviction further increases. You are getting a hammer pattern in the demand zone, or you are getting, let's say, bullish engulfing in the demand zone. You are getting a Marubozu in the demand zone. You would definitely attempt the trade. So no matter what, do not invest more than 5% in a single stock. That means at any point of time for investment, you got to be having minimum 20 stocks in your portfolio. Minimum 20. That is very, very safe and very well diversified. Alright. Goldium. Okay, so this stock was an excellent demand zone for a very, very long time. But if you converge it, let me shrink it. Okay. We will not be able to take only this section. Even if I make it here as 8 years, here you would have seen. Okay, so this stock would have traded in a demand zone for a very, very long time. Now you may say, sir, what is the use that I have jammed my money for several years? You have seen that the price is trading here. If you see the previous history, that was a demand zone. Maybe you would have entered here. What is that? A price of around 10 rupees and risk, and let's say 9 rupees is your stop loss. Example, 1, 2, 3, 4 years you had waited for it. But after 4 years, one thing what you have noticed is that there is no supply zone in the stock. So that 4 years, what you had waited patiently, you would have got a reward of 20 times in just 2 years. A 10 rupees stock had become 230. 20 times return in just 2 years, or 20 times return in 4 years is an excellent return, my friend. So patience is very much important. We will hold on to the trade for the time till the stop loss or the target doesn't come. No matter what. We'll have to wait for either stop loss or the target. One of this has to happen. Likewise, another company. This is called as multi-year breakout, guys. This thing is called as multi-year breakout. When the price consolidates in a tight band for a very, very long time and then finally it breaks out, then it is likely to give a very large movement. Even at this price, fundamentally company is very, very strong. But what is the pattern getting formed here? Inverted hammer. So what does that mean? The price is likely to fall. Then it may rise. Or maybe by the month end it can form a doji. We never know. Let's see, time will tell us. Another stock to see. Bhilwara Technical Textile. So this was a demand zone. Now there is no supply zone in the stock. These all companies are fundamentally strong. That's why we are looking at charts of this. So only in case the price comes here, we would attempt to buy. And then let's see. DLF. Godrej Properties. Excellent demand zone is present here. Okay. This has been the supply zone. Though the price had already moved higher, now this may become the new demand zone going forward. Okay, let's see that. Sobha Developers belongs to Narayan Murthy, Infosys founder. So management is very clean, sound. This has been a demand zone. Okay, an excellent demand zone. Now here see, this was a failed trade again during COVID time. This was an excellent demand zone, right? So you would have entered the trade at approximately 200 rupees and you would have exited at 140 rupees something. 60 rupees loss you would have exited the trade because the closing was also below this demand zone. But unfortunately, after that it retraced and went much higher. So this is a failed trade. There is nothing we can do. Like this failed trades also you would get. But in case you are hopeful that the price will go like this, maybe 1-2 stocks will go. But there are several stocks who will come like this and they'll stay like this for years and years. You'll be just jamming your money. Wherein I say that after exiting here, you may have boarded your money into some other stock that may have also risen like that. Think in that way. So another stock. Hindustan Unilever. Okay, no demands on it all. Okay, this is an excellent stock case. The price is very close to the demand zone. Trade shouldn't be missed. So if you want a fresh entry on any particular stock based on the demand supply, this price is very close to the demand zone. So sooner we may expect the price here in case there is any kind of bad news relevant to the stock market. And one thing very interesting that back to back several dojis are getting formed here. Okay, so many cluster of candles. So expect a big movement. If it is like this, never miss the trade because the supply zone is far away. Amazing chart pattern, guys. Trade should never be missed if it enters into demand zone. I myself would put money into it and show you. Let the price come into that zone. Doesn't come, never mind. We have missed the opportunity. Some other stock would come. But you can take a picture of this. Alright, so that is all. So this was your technical analysis for investment, very basic theory, and only look at fundamentally strong companies, buy at demand, exit at stop loss or exit at supply zone. Look at into candlestick patterns getting formed in the demand and supply, okay, which will give you a better idea what exactly is happening. So the homework would be any of your favorite 10 stocks, kindly mark the demand and supply zone and let me know if any stock is giving an excellent trade opportunity like we are able to see in Bajaj Consumer. The company is also fundamentally pretty strong. That's all. It's a short session. We end with here. And tomorrow we are going to start with technical analysis for short-term trading. This is investment, what we have discussed. Now trading means it could be intraday, it could be few weeks, it could be few months, but not few years. So for that we will be following Mark Minervini theory of VCP, volatility compression patterns. Very interesting, and there also the risk reward is in your favor. So that's all. Any questions or doubts, make use of the chat window or the audio control. Over to you.
Sanjay, can I make a 2 minutes call to you after this?
Sure, why not?